Hey everyone, welcome back to Crypto Performance Channel. Today, we're diving into the ultimate showdown, Bitcoin versus traditional stocks. We've all heard about Bitcoin, the digital disruptor that's been making waves in the financial world. It's decentralized, unregulated by any central authority, and its supply is limited, making it an attractive option for those seeking a high-risk, high-reward investment. But is it really the golden ticket to financial freedom? We'll get into that in a bit. On the other side of the ring, we have the tried-and-true traditional stocks. These are shares in established companies that have a track record of stability and often pay out dividends to their shareholders. Is this old-school investment strategy still the way to go? As we delve into this battle of the investment titans, we'll take a look at the pros and cons of each, compare their performance, and hear from industry experts to help you make an informed decision. Remember, investing isn't a one-size-fits-all game. It's about understanding your financial goals, your risk tolerance, and staying informed about the latest trends and developments. But we want to hear from you too. Are you Team Bitcoin or Team Stocks? Drop us a comment below and let us know your thoughts. And don't forget to hit that subscribe button and ring the notification bell, so you never miss out on our financial insights. All right, let's get straight to the point. Bitcoin, the modern disruptor, and traditional stocks, the classic investment. Which one is the smarter choice? Well, that depends on a variety of factors, and we're here to help you navigate through them. So sit back, relax, and let's dive into this financial showdown. It's Bitcoin versus traditional stocks. Let the battle begin. First up, Bitcoin, the digital gold, the talk of the town. Let's break it down. Bitcoin, the very first cryptocurrency, entered the financial scene in 2009, bringing with it the promise of a financial revolution. It's the brainchild of an anonymous person or group known as Satoshi Nakamoto, and it's sparked a whole new way of thinking about money. At its core, Bitcoin is a decentralized digital currency that operates without the need for a central bank or single administrator. Transactions are verified by network nodes through cryptography and recorded on a public ledger called a blockchain. This decentralization offers a level of anonymity and freedom from government control that traditional banking cannot match. One of the key attributes of Bitcoin is its limited supply. There will only ever be 21 million Bitcoins in existence. This scarcity is part of what gives Bitcoin its value, and is often likened to the way gold has value due to its finite nature. But it's not all digital rainbows and unicorns. Bitcoin has its fair share of risks. The most notable of these is its volatility. The price of Bitcoin is known to swing wildly in both directions, leading to potential high rewards, but also high risk. This volatility can be a boon for day traders and speculators, but it can also lead to substantial losses. There's also the risk of hacking. While the Bitcoin network itself is incredibly secure, the platforms and digital wallets where Bitcoins are stored can be vulnerable to hacking. Plus, if you forget your digital wallet's password, there's no bank to call to reset it. Your Bitcoins could be lost forever. And let's not forget the regulatory uncertainty. Governments around the world are still grappling with how to regulate cryptocurrencies, which could impact Bitcoin's value and usability. But does that mean it's the golden ticket to financial freedom? Hold on, we'll get there. Remember, Bitcoin, like any investment, comes with its own unique set of risks and rewards. It's crucial to do your own research and understand what you're getting into before you jump in. Now, let's talk about the OGs, traditional stocks. We're referring to those tried-and-true investment options that have been around for centuries. They represent ownership in a company and come with a portion of the company's assets and earnings. Traditional stocks, in essence, are slices of a company pie. When you buy a stock, you're buying a piece of that company, becoming a shareholder. And being a shareholder comes with its perks. You may receive dividends, which are a portion of the company's earnings distributed to its shareholders. Dividends can provide a steady stream of income, especially attractive for those looking towards retirement. And let's not forget about the stability. Stocks might not give you the adrenaline rush that Bitcoin does, but they offer a more predictable and steady growth pattern. This stability comes from a company's tangible assets and earnings. If a company is profitable and has a good track record, it's likely the stock price will reflect that over time. However, it's not all smooth sailing. Investing in stocks also comes with its share of risks. Companies can underperform, markets can crash, and sometimes stocks don't provide the returns you were hoping for. It's crucial to do your due diligence before investing. Research the company, understand its financials, and keep an eye on market trends. The potential benefits of traditional stocks include dividends, the possibility of capital appreciation, and voting rights at shareholder meetings. On the other hand, their risks include market volatility, the potential for loss, and the necessity for extensive research. One more thing to keep in mind is that the performance of traditional stocks is often tied to the overall health of the economy. When the economy is booming, stocks generally do well, but when there's an economic downturn, stocks can take a hit. So timing and a keen eye on macroeconomic indicators can be crucial in stock investing. So are traditional stocks still a wise investment in this digital age? But is the old school still the cool school? Well, that depends on your financial goals, risk tolerance, and investment strategy. And that's a topic we'll dive deeper into as we move forward. Scene script. Time for a head-to-head comparison. It's the modern disruptor versus the classic investment, the Wild West of finance versus the tried and true. Yes, folks, it's Bitcoin versus traditional stocks. Let's start with Bitcoin. It's like the roller coaster at the amusement park. One minute you're soaring high in the sky, the next you're plunging down at breakneck speed. It's thrilling, unpredictable, and for the adrenaline junkies among us, it's an intoxicating ride. But remember, with great potential returns come great risks. Bitcoin's value can skyrocket overnight, but it can also plummet just as quickly. The volatility is part of its charm, but it's also what makes it a high-risk investment. On the other side of the ring, we have traditional stocks. These are the steady ships in the financial sea. They may not offer the same thrill as Bitcoin, but they've got a track record that speaks for itself. Investing in stocks is like planting a tree. It might not grow overnight, but give it time and you'll see it flourish. Stocks offer dividends, stability, and the opportunity to invest in companies you know and trust. But remember, while stocks are generally less volatile than Bitcoin, they're not immune to market fluctuations. So let's put them side by side. Bitcoin, with its potential for high returns and equal potential for significant losses. Stocks, with their steady growth and dividends, but also susceptible to market downturns. It's the thrill versus the steady, the new age versus the old school. But here's the thing. There's no right or wrong answer here. It all comes down to your risk tolerance. Are you a thrill seeker, ready to ride the Bitcoin roller coaster? Or are you more comfortable with the steady growth and stability of traditional stocks? Maybe you're somewhere in between, looking to diversify your portfolio with a mix of both. What's your risk tolerance? We'll help you figure it out. But hey, we're not here to just give you our take. We've sifted through the sea of financial gurus, mined the depths of expert insights. And guess what? There's no unanimous verdict. Some experts are riding high on the Bitcoin wave, praising its potential for astronomical returns. Others, however, are staunch advocates for traditional stocks, highlighting their stability and the comfort of dividends. And then there are those who believe in a balanced portfolio, a mix of the new age and the old school. Now it's your turn to join the conversation. What's your take on this showdown? Have you had a taste of Bitcoin's high volatility, or are you more comfortable with the steady rhythm of traditional stocks? Maybe you've struck a sweet spot between the two. Are you Team Bitcoin or Team Stocks? We want to hear your investment stories and strategies. In the end, whether you're riding the Bitcoin wave or sticking to the traditional route, the key is understanding your goals, risk tolerance, and staying informed. It's not about choosing sides in a financial duel, but about making smart decisions that align with your unique financial blueprint. To recap, Bitcoin, the digital disruptor, shines with its decentralization and limited supply. On the other hand, traditional stocks offer dividends, stability, and a time-tested investment route. Both have their pros and cons, and both require due diligence. Remember, it's not just about following trends or listening to experts. Your financial journey is personal. It's about finding a strategy that matches your risk tolerance, your investment goals, and your vision for the future. That's a wrap for today's showdown. If you found this video helpful, give it a thumbs up, share it with your fellow investors, and don't forget to subscribe for more financial insights. Until next time, happy investing!